markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
World Headquarters. I'm Charlie Pellet. We've got 13 minutes to go ahead of the closing bell. We're looking at records right now for the Dow, the S&P, NASDAQ 10-year yield 1.53%. S&P up 4, higher by 0.1%. The Dow up 78, up 0.2%. NASDAQ up 22, up by just about 0.1%. Stocks higher. Traders are weighing disappointing earnings reports as well as bond market gyrations sparked by concerns over inflation and monetary tightening. We've got Apple shares on the minus side, down by 2%. Amazon also after earnings, tumbling by 2.8%. 10-year yield, 1.53%. Spot gold down 0.9%. 17.82 the ounce. West Texas Intermediate crude up 0.6%. 83.30 a barrel on WTI. But what you need to know, we're looking at records right now with just about 12 minutes to go ahead of the close. A story we're following, mayoral candidate here in New York, Curtis Sliwa, hit by a taxi this morning. He sustained minor injuries, and according to his campaign. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
Democrats continue to wrestle with the supposedly transformative spending plan and the means to pay for it. On Thursday, President Biden announced yet another version of what this might involve. There's a reason for the muddle. Democrats have two contradictory priorities: spend as much as possible, but without raising taxes on most Americans. This week, Biden and his allies turned their attention to a complex, hard-to-administer levy on the rich. To nobody's surprise, the so-called billionaire tax met strong opposition. What's strange is that the tax plan supported by Biden during his presidential campaign made more sense than all of these. Reform the taxation of assets at death. Unrealized capital gains would no longer escape tax through a provision called stepped-up basis. Biden is right that the well-off should pay their fair share. He's also right that capital gains have been exploited. Abolishing stepped-up basis at death is a straightforward and constitutionally sound way to pay for what we need. It should be revived. This editorial was written by the Bloomberg Opinion Editorial Board. I'm David Shipley. For more opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg Terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
So just got about 10 minutes left, getting ready to wrap up the Friday trading session, getting ready to wrap up the week, and getting ready to wrap up the month.
Time, where does it go?
Where does it go? Time flies when you're having fun. And we are seeing stocks definitely off their lows near their highs of the session. Let's get to it. I'm so excited he's back with us. Love talking with Doug Ramsey. He's Chief Investment Officer over at the Leuthold Group. Their core investment fund, by the way, beating most of its peers, many of its peers, I should say, year to date, up about almost 13% this year, up 21% in the past 12 months. Doug is back with us on the phone from Minneapolis. Doug, how are you?
I'm doing well.
What do you make of the market trade? Definitely a different tone this month versus last month. What stands out for you?
Just the way this market is absorbing news is really impressive. I mean, you have two titans of industry, of technology, disappointing yesterday, and here we have them. The stocks aren't up, but the Nasdaq 100 is up on the day, and it's up 3% on the week. In a week in which sort of the average stock, and a very good measure of that we scrutinize pretty closely, is the value line arithmetic composite. It's sort of obscure, but it's valuable because it's 1,700 stocks equal weighted, and that's down 1% on the week. So pretty odd action. I mean, clearly renewed focus on just these mega cap tech stocks. It's pretty amazing.
Yeah, I think the term that I'm looking for is "Thank you, Tesla." That's what it's. I mean, that's really what this week looked like, and we're seeing that offset. Yeah. We're seeing that offset losses for Apple and for Amazon today, at least. Doug, well, help us make sense of that a little bit, because you write that we're in the steroids era, wiping out all other yardsticks of excess, and you illustrate this with something that I think a lot of our listeners are familiar with. Anonymous owner of a crypto wallet has made almost $6 billion on an $8,000 investment since August. What is this illustrating to you?
Well, what's interesting, I mean, you've written about it at length, but I mean, there's not a lot of widespread commentary on that. I mean, this is a $6 billion trade. I mean, it totally eclipses The Big Short by John Paulson. He personally made $4 billion back in 2008 after elaborately structuring, this bet against subprime mortgages. And then, of course, George Soros and Stan Druckenmiller made $1 billion in a day shorting the pound. I mean, those stood as like the hallmarks of the greatest trades of all time. And now we have a no-name, and who knows, maybe it's not a no-name, making $6 billion on an $8,000 investment in 2 months. The comparison, any comparison to the tech bubble, I mean, we've really blown away most of those. I think this year with kicking it off with the Big Short squeeze, and GameStop kicking off the year, and things have just gotten progressively wackier. So money is still floating around.
What do you do, Doug, to make sense of cryptocurrencies? Like, as a technician, are there things that you feel like with certain conviction that you can kind of understand this market better, more clearly, or I don't know?
I'm not sure that I do. I think it's just a function of the environment. I mean, if you think that this mania has got some life left in it, and that's, there are a lot of economists that would point to, and I mean, it's factual. I mean, we're only a year and a half into this economic expansion. Now, if you look in environmental indicators, whether it's economic measures, unemployment at only 4.8%, profit margins at record highs, or whether it's more market sentiment measures, I mean, none of that stuff is early cycle. None of that is consistent with an economic expansion that's only a year and a half old. More of it's consistent with a single economic expansion that's like 13 years old, dating back to 2009.
That's what I wanted to ask you. How are we supposed to assess the pandemic, which fell apart, economy shut down, everything fell off a cliff, right? We just stopped. And then we bounced back when we started to get support and we started to get the vaccine. So is it just part of the economic cycle that was happening, or do we look at it as a new cycle? Especially when you look at the supply disruptions and we're trying to reassess, labor. Does the market not go back to where it was pre-pandemic? So are we now in kind of a new market cycle era, new economic cycle era?
I think it's more productive to look at it as just, an extension and an acceleration of a long cycle. I mean, it was just a temporary interruption. It was a very scary one, but it didn't, do anything to purge prior excesses. I mean, to the contrary, we doubled down on prior excesses in terms of, lobbing on yet another trillion in corporate debt. I'm not saying that credit quality is compromised, because profits are so good right now and rates are still low.
Why isn't credit more compromised in your view?
Why do I think spreads are incredibly tight, but, with rates this low and cash flow pretty strong, it's hard to see an imminent weakening in credit quality. But I think the risk reward for jump debt from here is very unappetizing.
Hey, just got about a minute or so left here. Love talking to you for so many different reasons, but tell us, when you look at the market, you're neutral on the stock market right now. Tell us what you're seeing and how we should be playing it as we tick higher here near the close on this Friday.
Well, playing is a good word, because it's certainly more speculative market than one with a lot of investment appeal. We are ones, as you mentioned, to look at the charts, and with again, sort of the average stock, that value line measure, making a new high earlier in the week. New York Stock Exchange daily breadth making a new high earlier in the week. I mean, even though, we've rotated back to the usual suspects, the FANGs, it's still a broad market, and it would be very unusual for it to top right here with the market as broad as it has been. So despite the fact that we don't like valuations, that's nothing new in our shop of late, and that we're leery on the tapering. From a technical perspective, it says there's probably more life left before you have a severe setback, I think, related to the tapering that will.
We got to run. Sorry, Doug. Have a good weekend. Doug Ramsey, Chief Investment Officer at the Leuthold Group, joining us on the phone from Minneapolis. All right, get ready, everyone. We've got our cross-platform coverage, our market comprehensive coverage with our radio, TV team, and on YouTube. We're counting you down to the close on this Friday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And we are about 2 minutes away from the end of the trading day, the trading week, the trading month. Caroline Hyde, Taylor Riggs, Shonali Bassett, counting you down to that closing bell. Here to take us beyond the bell, the global simulcast. You know it, Carol Massa, Tim Stenovic, bringing together our TV, radio, YouTube audiences to pass this would have been a kind of an extraordinary week where equities keep on rallying, the bond market keeps on sending warning signals, and some heavy tech hitters underperform.
Yeah, underperforming. And then check it out, Caroline. I mean, here we have the last few minutes of trading. We're seeing stocks tick higher. The NASDAQ up about 1/3%, even though we saw some big tech heavyweights disappoint. For the week, the NASDAQ 100 is up more than 3%. So go figure, despite the disappointment, Tim.
Since last November, that's what I'm on track for in these last couple of minutes of trading.
Yeah, really interesting. Some of the buying that we're seeing within the equity market and, well, within the bond market this week. I know we're going to get to that later, but you talk about a further inversion of the 20s, 30s curves with the 198 on the 20s, a 193 on the 30-year. You just heard there from Jonathan Golub, Shonali. We had him here on TV of sort of signaling that if the Fed is behind, they are going to be slowing down future growth. The market may not be totally comfortable with that just yet.
Yeah, absolutely. And I just can't get over this because even with that performance in the S&P on the month you have almost every hedge fund strategy in the red. So those stock pickers don't all know what they're doing. The equity hedge fund managers.
Shade, Shonali, shade.
It's amazing. They're closing the books as we speak, and it's not looking so good for October.
You just needed to be long. Needed to be long, the S&P 500. Don't get too clever. Bet on equities, it would seem, for the time being, because the month of November has been October, I say, has been a stellar one. The S&P 500 at a new record high. As we get settlement, as we see the bells ring, S&P 500 closing up at 4,605. We're up almost 9 points. It's only up 0.2%, but it is good for a new record high. We are good for a new record high on the NASDAQ as well. We closed 50 points higher. That is 0.3%. 15,498 is where we trade. And then even, some of our cyclicals, the Dow Jones Industrial Average also getting a bid, up 0.25%. We see that carry up 89 points, 35,819. But the Russell 2000, once again, as the Dow closes in on a record, the Russell 2000 not there, we're in the red.
Yeah, exactly. And I'm looking at the monthly figures. Folks, I cannot believe October's over. We know September was a rough month for stocks. Very different tone here in October. The S&P 500 alone up almost just shy of 7% for the month overall. Check out the NASDAQ 100. That is up 7.9% for October. So we have definitely seen the bulls in control this month, Taylor.
And you see that a little bit, too, here on some of the individual sector levels for our radio audiences. We do. It's the sector winners, the sector losers. For the most part, it's green in the winners section and red in the losers section. So it looks to be about even. What's interesting, though, is it's auto components that are the big leaders today, up about 2%. How much of this continues to be that positive commentary from Ford, from GM, from Tesla that we continue to got today? Media and entertainment as well, Caroline had mentioned, or Carol, I believe that was you. Facebook, we're now calling that Meta. I'm still trying to get on board with that. You're up 0.7 of 1%. Quickly, I'll just take you through some of the losers that we're seeing. You're off anywhere from 1 to 2%. For some of the worst performers, it's tech hardware and it's tech equipment. Some of the retailing indexes, we continue to talk about some of the supply chain issues and the chip shortage.
All right, let's get to some of the gainers for the week. Tesla, I had to point out today, up another 3.4%. For the month, Tesla is up. Tim talked about it earlier. It is up 43% for the month of October, on track for its best monthly rally in almost a year. Valuation, where did we end? I think it was 1.1 trillion. Just remarkable in terms of its market value. And we know why, right? What happened in October? We had blockbuster delivery report for the third quarter, strong earnings, and then we had that 100,000 vehicle order from Hertz. So not too shabby a month at all. Want to mention Team Atlassian. That stock was up just shy of 10%. It hit a record today, top in the NASDAQ 100. Earnings after the close last night. First quarter EPS and sales beaten out with the second quarter revenue forecast. That's above the street estimates. It also announced its CFO, James Beer, will retire next year. And one more I want to mention, W.W. Grainger, up about 7.5%, top performer in the S&P 500. It's a distributor that cuts across so many different industries, so we always want to hear what they have to say. Third quarter adjusted EPS beat. They reaffirmed their guidance, and here's what they said. Despite the current market and supply chain uncertainties, we are confident in our ability to deliver solid performance in the fourth quarter and enter 2022. That's upbeat, especially from a company, Tim, that crosses so many different industries. They're optimistic.
Well, you got the gainers, I got the decliners. I want to talk about a couple of companies weighing both on the S&P 500 and indeed on the NASDAQ. Apple, after earnings, finishing the day down by 1.8%, bouncing up from session lows. We know what happened. The company missed on revenue overall, just ever so slightly, but it said it lost $6 billion in sales because it can't meet demand for its products and could lose even more next quarter. The company is expecting the iPad to see revenue fall year over year in first quarter, and also services growth to slow as well. Investors trying to make sense of those supply chain challenges for Apple. Amazon finishing it down by more than 2%. The company reporting earnings after the bell yesterday. It's all about higher wages that has investors worried, though. Supply chain challenges as well. The company says it will persist these higher wages, and then it's not sure if things like the $3,000 signing bonus will go away anytime soon. We talked to Laura Martin at Needham earlier in the day today. She's got a $4,100 price target, $4,150 actually. She actually calls these labor costs transitory and thinks they're just seasonal and thinks that they're going to go away after the holiday season. So she still remains unchanged with her price target even after this most recent quarter report. Starbucks also finishing the day down by more than 6%. The company reporting that sales for the most recent quarter came up short, as did same-store sales as well. Starbucks now, guys, just slightly negative on the year.
Meanwhile, let's move on what's on the downside in terms of equities to what's on the downside in terms of FX. Basically everything against the US dollar. The US dollar came back strong today. We're up 0.7% on the Bloomberg Dollar Index. The reason is because we're looking towards the Federal Reserve next week. We're looking towards a flattening yield curve here in the US. We're looking towards basically bets that the Federal Reserve is going to be forced to make some sort of policy move as inflation is on everyone's minds. As we see it baked into some of those earnings performances that we see. Interestingly, inflationary pressure just creeping back a little bit in terms of crude oil today, up 0.6%, $83. 11% higher on the month is oil. That as we look towards OPEC Plus next week, November the 4th, that's when we have the meeting. What will they do in terms of production? We just see some money coming out in natural gas. We've, of course, been on a tear with the gas crisis overall. Iron ore on the downside, some really volatile moves when you look at what China is doing with coal, trying to solve its energy crisis and what that means for metals and finally getting some supply side back up there. And, I mean, what a story for sovereign bonds. Today we see red across the screen. We see, I mean, an absolute backup in the 10-year yields in Greece, in Australia, but then the short end of the curve also backing up in Portugal, for example, 10 basis points higher in terms of your 2-year in Portuguese debt. So is there a flattening yield curve across the world, Taylor?
Well, at least here within the U.S., Caroline, it was sort of a week that I dream of, if I do say so myself. A 20s,
we got to work on that, Taylor.
And inverted for the first time, and indeed we stay there with the 198 on the 20s, the 194 on the 30s. So for a weekly view, though, what was so interesting is it was a rally across the board. On the 10s, we started the week at a 208 down to a 194. I apologize, that was the 30s. For the 10s, we started at a 163. We migrate downwards to a 156. And Carol, what was so interesting is this also came on the week of big tech. Typically, big tech is the big outperformer with lower yields because the discounted cash flows and the math works better. But this week really was all about the fundamentals and perhaps maybe the disappointment on the tops and the bottom lines.
I think that's such a good point. Fundamentals mattered when it came to big technology. I was just looking at some of the weekly tallies. Microsoft was up more than 7%. Twitter was down 14%. You look at Alphabet up 7%. Apple up about 0.75%. Amazon up 1.1%. Investors were definitely kind of sifting through the individual stories and the fundamentals and reacting accordingly. So it wasn't just all in on big tech or all out either.
Yeah, I think when we talk about Amazon, when it comes to big tech, we got to be thinking about what happens with AWS, by far the most profitable segment. In fact, I go back to my conversation with Laura Martin at Needham earlier in the day today. She essentially says the cloud business with that 30% positive margin, when you do that math, you're getting the e-commerce business for free with the company's stock price right now.
So interesting. E-commerce, we know, under pressure in a lot of areas. Social media under pressure. So out with the old, I guess, in with the metaverse?
It's not the metaverse out on the streets, I can tell you. The queue that you're seeing outside the Spirit Halloween fancy dress store is real. This is a supply chain issue when you're going to be getting your fancy dress overall on the weekend. We had to turn to bricks and mortar if you couldn't get it online quickly enough, guys. But we're also looking past Halloween into next week, and of course the labor data and Federal Reserve coming front and center.
I'm trying to find a photo of my cat who I've dressed up as a cowboy. Here, he's dressed up as a cowboy. I'll tweet it out. Everyone's gonna love it. Caroline is right, though. On a serious note, it's supply chain issues.
Yeah.
And we push forward to labor issues with Uber and Lyft next week, a Federal Reserve, and a Jobs Day all next week.
We'll see how the Fed adds it all up. They will not be doing it in the metaverse, but it'll be interesting to see how they make the supply chains, the improvement in the labor market, but yet there's concerns about economic growth longer term, and they don't want to be too fast when it comes to hiking rates. All right, that's going to do it. Happy Halloween, everyone. That is our cross-platform coverage, our market wrap on this Friday and for the week and for the month of October. Have a good weekend, everybody. Beyond the Bell. We'll see you again on Monday, same time, same place.
This is Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Keep thinking what Doug Ramsey said to us over at the Luthold Group, and he said momentum and breadth are just too strong to suggest an important top is at hand. So as he said, there's a lot of indicators that say we're not in the early cycle, and it could be already a 13-year cycle that we are through, but he said the momentum and breadth say otherwise.
I'm sorry, you still have me at that more than 40% gain for Tesla for the month.
Isn't that amazing?
Amazing.
It's like remarkable what we've seen in Tesla shares, not only in the past month, but just for the year overall, and just from the low, too. It's pretty much doubled, I think, from its low.
Well, let's head to Washington, D.C. for a check of the latest world and national news. Nancy Lyons is in the 99.1 newsroom. Hey, Nance.
Thanks, Tim. President Biden has been meeting with world leaders today. First, he had a one-on-one with Pope Francis, then spoke with French President Emmanuel Macron, hoping to repair relations following a deal with Australia on nuclear submarine technology that ruined a French sub deal with the land down under. Biden admits it was mishandled.
What happened was, to use an English phrase, what we did was clumsy. It was not done with a lot of grace. I was under the impression certain things had happened that hadn't happened.
Biden emphasized France remains a valuable partner. Macron says what really matters is what they do together in the coming weeks, months, and years. A new round of haggling is underway on President Biden's agenda, including the infrastructure bill and another one on social spending. Bloomberg Government's Emily Wilkins says the president had hoped for a vote on infrastructure before he left the country, but of course that did not happen.
Progressives said we're not going to support infrastructure right now. Sorry, Joe Biden, we know that you came and asked it of us, but we can't go and support that until we are sure that the social welfare and tax plan is actually going to pass. And while the framework is there, there's still not a final bill. It's still not in the format that it needs to be in to actually get a vote on the House floor.
Again, Bloomberg Government's Emily Wilkins. The FDA is agreeing with an advisory panel in authorizing the use of the Pfizer-BioNTech vaccine in kids between the ages of 5 and 11. But before those shots can go into arms, the CDC will have to weigh in. Its advisory panel meets next week. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts to more than 120 countries.
We're having too much fun.
Oh my gosh, it's such a Friday mode. We love it. We love it here. Thank you for putting up with us and your patience. Where are we going?
I want to talk a little bit about Rivian.
Let's talk about it.
This is a great story by Ed Ludlow and Matt Day.
It's so funny when I was looking for gainers, I'm like, I couldn't remember Rivian. I know they're going public, and I was like, are they public? Because I knew the stock would would no doubt react to this, but it's not gone public yet.
Well, one thing that happens with quarterly reports is you get the filing, so you still learn about companies even after they report earnings. Amazon.com, for example, owns a 20% stake in the electric vehicle maker Rivian Automotive. The startup has placed an order for 100,000 battery-powered delivery vans, the e-commerce giant disclosed Friday in a securities filing.
Right, so as of September 30th, Amazon held equity investments, quote, including preferred stock of Rivian Automotive, representing an approximately 20% ownership interest, which will be valued on the balance sheet at $3.8 billion. That's up from $2.7 billion at the end of 2020. Amazon, of course, in that filing that it put out.
Rivian is seen as a genuine contender in the EV market and potential rival to Tesla. The startup's raised more than $10.5 billion from investors to date, and it's seeking a valuation of $80 billion in an IPO later this year. Bloomberg reported this back in August.
Yeah, what's interesting, I find, in this story and in others, is you're starting to see, first of all, there's new players and serious contenders to kind of Detroit when it comes to the auto industry. And we're seeing Detroit certainly pick up with their EV offerings. But it is interesting to see whether it's Rivian, whether it's, I was looking at Lucid Motors. Like there's just so many, there's Tesla, of course, and there's new entrants that are going to be part of probably where we all are shopping from.
Don't shrug off VW, don't shrug off Mercedes.
Exactly.
Don't shrug off Ford and General Motors.
No, who are pivoting in a big way.
But obviously, shareholders have said, hey, Tesla is where we're putting our money right now.
Well, and some would argue that, okay, but I mean, General Motors is up 31% this year. So investors are definitely noticing their pivot and acknowledging that for certain. All right, you're listening to Bloomberg Radio. Carol Master, Tim Stedovic, and this is Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. We close the books on the trading month of October, and it is on to November, with the Dow, the S&P, and NASDAQ all climbing to records today. For the month of October, the S&P 500 index was up 6.9%. S&P making it the fourth weekly gain in a row, up on the week by 1.3%. Stocks rose as traders weighed disappointing earnings and bond market gyrations amid concerns over inflation and monetary tightening. We've got that Fed meeting next week. After earnings, Apple down today by 1.8%, Amazon lower by 2.4%. Today's closing numbers: S&P up 9, a gain of 0.2%. The Dow up 89 today, up by 0.3%. NASDAQ up 50, also up by 0.3%. 10-year yield 1.55%. Spot gold down 0.9%, 17.82 the ounce. West Texas Intermediate crude up 0.7%, 83.39 for a barrel of WTI. Tesla up another 3.4% today to close at a record, and Meta Platforms Inc., formerly known as Facebook, jumped 2.1% after announcing that name change. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Got it. Thank you so much, Charlie. Well, I've hit on this, the two of us actually have hit on this a few times this week, and that includes a Bloomberg Live Equality panel that I did. It was about ESG with a couple of critics, including Tariq Fancy, founder and CEO of the Rumi Initiative, but he's also former Chief Investment Officer for Sustainable Investing at BlackRock. He's now a critic of ESG. Check it out.
The answer to climate change is clearly, Nobel Prize winning economists are telling us it has to be policy reform. Starts with a price on carbon that is a systemic reform that, addresses a systemic problem. That has to be government action. And I think that the economic system is being so seized by a set of narratives that have underlie the system and are almost invisible, that emerged in the 80s that tell us that free markets solve all problems, that even when faced with market failures, 13 years after the financial crisis, we're still sort of hitching our ride to a set of solutions that don't really work.
And that's Tariq Fancy, founder and CEO of the Rumi Initiative, former Chief Investment Officer for Sustainable Investing at BlackRock. ESG funds, though, combined assets climbing to $2.3 trillion for their fifth consecutive quarter of growth. Bloomberg has come out and said ESG assets could hit $53 trillion by 2025. Someone who has some thoughts on this and the role of big banks in all of this is Mike Mayo, very well known to our Bloomberg family, someone who has been following the banking industry for years. He's Analyst Managing Director, Head of Large Cap Bank Research over at Wells Fargo Securities. He's on the phone in New York City. Mike, good to have you back with us. How are you?
I'm doing great. Thanks for having me.
Hey, listen, good to have you here. You've got a note out about banks, ESG, climate change, and COP26. We are all into on COP26, talking a lot about it. What's the relationship between ESG and banks and their role in all of this?
Well, banks would like to be part of the solution when it comes to the climate issues. And when it comes to the stocks, they have a chance to gain a green premium or at least avoid a brown discount. And after the global financial crisis, it was very clear that large U.S. banks were tone deaf to the needs of society. But now it's night and day, and the banks truly care about their reputation and about getting that intersection between serving the needs of shareholders and serving the needs of society. So the largest 5 big global banks in the U.S. have each committed to be net zero by 2050, and combined, they've committed $4 trillion in commitments over the next decade. So they're trying to play their part in the narrative of the solution.
Of the banks that you cover, Mike, which one is best positioned to go into a future where it is focused on ESG and get that green premium?
Well, we added up the number of pages on ESG at the 15 to 20 largest banks. There's over 2,000 pages. So there's lack of consistency in data. There's a degree of greenwashing. There's a degree of where it's simply a market feel-good exercise. There's no standards for data. There's conflicting conclusions among different rating agencies. And so it's really a mishmash of information. So with that enormous caveat, one company that stands out is Bank of America. And just last night, I was in person with their departing CFO, Paul Donofrio, who, as of next week, takes over as head of climate for Bank of America, reporting directly to the CEO. So he certainly has the CEO's ear. They've committed $1 trillion of commitments over the next decade. And he was just so animated talking about scope 1, 2, and 3, not just what Bank of America's doing, but deciding who they're going to lend to and helping their customers transition to become net zero by being a trusted transition advisor. And it's not just their customers, it's their customer suppliers and everyone else on down the line. So, and also the CEO of Bank of America is part of a global association that's trying to set standards.
Right.
And they were also the first big bank in 2019 to become net zero in terms of carbon neutral,
right.
For their own operations.
Hey, Mike, there's playing a part in the narrative, and then there's actually playing a role in the solution, doing something that actually stops climate change and reverses it. And I think you're spot on that it's the Wild West when it comes to reporting. Unless we get the industry to come together, the financial industry, and agree on metrics for measuring. And most would say, this panel I did here for Bloomberg Equality, say we need government involvement. There's got to be either penalties, whether it's a carbon tax or something much more significant, but it's almost got to be like COVID, how we got everyone together to ultimately find a solution, figured out what the problem was, and then get a solution. That we need to address that similarly when it comes to something like ESG. Got about 50 seconds here.
Okay, well, the good news is there's a profit motive here for banks to tap in the innovation economy with renewable energy, e-vehicles. There might be $100 billion revenue opportunity just with the investment banks themselves. The issue is I attended Climate Week NYC last month, and it looks like the amount of money needed is 5 times more than what's getting spent. And so you must have a combination of public and private efforts to come together. And so banks want to be part of the solution, but someone's going to be driving the solution from a higher up level.
An important conversation. I hope you come back and talk more about this because I think everybody's thinking about it. As I mentioned, the amount of money that's going into the ESG space, it's just nonstop, record levels year after year here, at least as of late. And so the idea of having some metrics, some standards, ways for investors to really measure, because as one person said on my panel, putting money into an ESG fund that owns Salesforce, is that really going to change climate change? Forgive me, Salesforce, not my words.
That's a good question. Something that will be talked about a lot next week, I think, in the wake of COP26.
Totally. All right, stick around, everyone. You are listening to Bloomberg Business Week right here on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Where's your mustache?
It's in the process of growing. If I go, I don't have to start until. Check it out on YouTube.
You too can look like Ted Lasso.
Yeah, there are going to be a lot of mustaches on Sunday for Ted Lasso.
I want to dress up like Ted Lasso.
Mitt Romney dressed up like Ted Lasso.
If you've missed it, just Google Mitt Romney and Ted Lasso. It's worth it. Coming up, Movember, just around the corner, we're going to talk to the CEO of Movember, and then we're going to catch up with a really cool individual who sold this company, and now he's in VC.
Yeah, Kerry Smith, the founder of Unorthodox Ventures, is going to be joining us in just a few minutes. In the meantime, here's a check of the latest business news with Charlie Pellet.
Hi, thank you very much. And here's what's going on. Turned out to be an up month, an up week as well. Let's do the monthly numbers first. What a number that is. 6.9% on the S&P. Biggest monthly gain since last November. On the week, S&P made it 4 in a row, up this week by 1.3%. Today, choppy session swinging between gains and losses, but by the time that closing bell clanged on Wall Street, it was an up day for the S&P, picking up 9 points, up 0.2%. The Dow up 89, up by about 0.3. NASDAQ higher by 50, also up by 0.3%. 10-year yield 1.56%. Spot gold down 0.9%. 17.82 the ounce. West Texas Intermediate crude up 0.6%. 83.34 barrels. So stocks higher as traders weighed disappointing earnings and bond market gyrations amid concerns over inflation and monetary tightening. What a week, what a month. As for the market backdrop, Doug Ramsey is Chief Investment Officer at the Luthol Group. He was our guest right here on Bloomberg Business Week.
You know, just the way this market is absorbing news is really impressive. I mean, you have two titans of industry, of technology, disappointing yesterday, and here we have them. The stocks aren't up, but the Nasdaq 100 is up on the day, and it's up 3% on the week.
Well, as for those titans, we saw Apple fall today by 1.8%, Amazon down by 2.1%. ExxonMobil, Chevron, they're plowing windfall profits into share buybacks as soaring energy prices boost cash flows. Exxon says it will revive repurchases for the first time since 2016. Chevron is also considering an expansion of its buyback program after surging natural gas prices and oil refining returns drove free cash flow to an all-time high in the last quarter. ExxonMobil shares today, we saw Exxon up by about 0.3%. Chevron after earnings up by 1.2%. Again, recapping stocks end the week, head into the Halloween weekend at a record. S&P up 9, a gain there of 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Yeah, thank you so much, Charlie.
Charlie working on his mustache?
Not on the mustache.
Do you do mustache?
Right. Starting Monday, Charlie. Starting Monday.
Am I going to succumb to pressure? Maybe. We'll see what happens.
Pressure.
Yeah, I love it.
All right, it is that time of the year, though. November just around the corner, so Movember is just around the corner. It's an annual event involving the growing of mustaches during the month of November. It's all about raising awareness of men's health issues, such as prostate cancer, testicular cancer, and men's suicide. So they're on a really important mission.
Michelle Terry is the CEO of Movember. She joins us on the phone from Melbourne, Australia. Michelle, thank you so much for taking the time. I'm curious what your goal is with Movember this year, given that we're hopefully on the tail end of a pandemic, and how it's different from years past as you've grown the organization focus.
Thanks. It's wonderful to be here. Movember's now been going since its inception 18 years ago in Australia, and our mission to have men live longer, happier and healthier lives remains more important than ever. So some key statistics which I think are very compelling. 3 out of 4 suicides are men. Men on average live 5 years younger, die 5 years younger than women. And also you have something like 1 in 8 men who will develop prostate cancer over their life. So these are really big, thorny problems, and they're not going away. And I agree, and I very much hope we're past this pandemic. But the pandemic also exacerbated some problems that we've been seeing for a long time, particularly in the mental health area for men, as social isolation really is a trigger for mental health problems, and whereas connectivity is exactly the opposite. So getting people together and getting men to talk and take action on their health is more important than ever.
Well, and what's interesting too, and I know we've talked with you, Michelle, about the impact of the pandemic. I do feel like, you guys are singling out men's health, but whether we as a society single out men's health, women's health, kids, minorities, elderly, we can all probably agree that everyone needs access to good medical care, but different groups need different priorities, and it's good for us to not say just one blanket statement when it comes to health care, right, and medical care, that we need to look at different populations differently. And the pandemic showed us, whether it was minorities, different individuals were being impacted by COVID differently. So it's important for us to kind of separate out these verticals.
Yeah, absolutely, Carol. And we know, for example, picking up on your point on minorities, that there are certainly barriers to access to healthcare and, worse prognosis. So whilst we speak to all men, we want to make sure that we're championing better results for different sectors of men as well.
What about working to make Movember a 360-day thing that we think about rather than something that we think about just 1 month a year?
Super question. And I'd love to get out there to your listeners that we are operating 365 days a year. Obviously, we're very proud of the month of November, and we use that as a time to really shine out there in the lives of people who want to raise funds for the important cause of men's health, but also get the message out there about how important it is to have men take action on their health. And then the rest of the year, we're working really, really hard in terms of helping men do exactly that. So, for example, we highlight testicular cancer awareness in April. We talk about World Suicide Prevention Day in September. And we also, right throughout the year, are doing life-saving and life-changing work in biomedical research. We're delivering programs into the community. For example, in the US, Making Connections is a Movember-funded initiative in partner with the Prevention Institute. And we work with 5 communities across the US to drive community-level approaches to improve mental health outcomes, focusing on education, social connections, creating safe space for the veterans, young men and boys of colour. And things like digital health tools. We released something called Movember Conversations last year, which is an interactive online tool that helps people have conversations.
Yeah, that's actually very interesting, and I bet that is something that's very useful. And I could see we've learned how using online, certainly during the pandemic, especially when it comes to healthcare, medical care, mental wellness, that has been a big mover. Michelle, thank you so much. Good luck with your efforts, and not only in November, but throughout the year. Michelle is Chief Executive Officer of Movember on the phone from Melbourne, Australia.
Let's head now to Washington, D.C. for a check of the latest world and national news. Nancy Lyons in our 99.1 newsroom there. Hey there, Nance.
Thanks, Tim. Climate is expected to dominate discussions at the G20 summit this weekend and the UN's COP26 summit next week. UN Secretary General Antonio Guterres says he's extremely concerned about the lack of urgency among many leaders.
Even if recent pledges were clear and credible, and there are serious questions about some of them, we are still careening towards climate catastrophe. And in the best case scenario, temperatures will still rise well above 2 degrees, and that is a disaster.
Gutierrez says they need to do a better job at mitigating the problem. Climate did come up in the 75-minute meeting President Biden held today with Pope Francis. Aides say the two also discussed the pandemic, but they did not discuss abortion or gay rights. Officials say the connection between them was warm, and there was even some laughter during the meeting.
Nice to see you. It's been a while. Yeah. You kept all your hair, and I've lost most of mine.
Biden previously met Pope Francis at the Vatican when he was vice president in 2016. The Supreme Court will be hearing arguments Monday concerning the controversial new abortion law in Texas that bans abortions after a fetal heartbeat is detected, which is usually around 6 weeks. Brigitte Amiri with the ACLU Reproductive Freedom Project believes this is a start of a trend.
We already know that politicians in Arkansas, Florida, and Ohio may try to follow Texas's cool lead.
Amiri says it's outrageous the Supreme Court has allowed the law to remain in place. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much. So this story definitely popping up on our radar has to do with venture capitalist Mark Andreessen and his wife, Laura. They are the buyers of a Malibu compound. It's sold for $177 million, according to people familiar with the deal.
This is a story from Dow Jones, and it always gets our attention when we see some mega deals for real estate. The deal closed this week. It set a California sales record. The sellers were fashion mogul Serge Azaria and his wife Florence Azaria, who bought the property for $41 million back in 2013.
Oh, who are those people? Are they the ones who own? Yeah, I think I know who they own. I'm trying to think about it. Anyway, the deal did close this week. It set a California sales record, as you mentioned. It's located in the Paradise Cove section of Malibu. Property approximately 7 oceanfront acres, multiple structures. It's a compound, including a roughly 10,000 square foot main residence, 2 guest houses, a cinema, and a spa. It's not a compound. It's a little city.
Sounds nice, right? Well, this was a record breaker. Because the record for previously the highest price deal in California, that was set by none other than somebody named Jeff Bezos, the Amazon founder. He purchased the estate from David Geffen for $165 million. That was last year. So this one, not that much more, $177 million.
Yeah.
What's $12 million here or there?
Between friends.
$13 million here or there.
Azria, I can't remember, but that's BCBG, Max Azria, that's the global fashion, and they're behind Joey Equipment, Current Elliott. They have a bunch of fashion brands, and they bought the property from a trust tied to Hollywood producer Jerry Weintraub. And Mr. Azria, forgive us if we're mispronouncing, he told the Wall Street Journal it took him 4 years to build something like a village on the property, including that cinema and a little French bistro outside.
This sounds like a great house.
Sounds like a little village.
Sounds like a party house, too.
But it has great closets.
That's what you're thinking about?
These guys know this. I'm in search of just a big closet with a house
This is like
attached.
you live in the New York City metropolitan area, so that's, you just don't have closets here.
$177 million. All right, you're listening to Bloomberg Business Week. This is Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
On Bloomberg World Headquarters, I'm Charlie Pellet. An update on Wall Street with the Dow, the S&P, NASDAQ, all advancing records as we head into the Halloween weekend. Stocks advance. Traders weighing disappointing earnings and bond market gyrations amid concerns over inflation and monetary tightening. Today, we had the S&P 500 index up 9, gain of 0.2%. 46.05 right now on the S&P. The Dow up 89, also a record up 0.3 today. NASDAQ advanced 50 points, 15,498 on NASDAQ, up by 0.3%. 10-year 1.55%. Spot gold 17.82 the ounce, down 0.9%. And West Texas Intermediate crude up 0.6%. 83.34 a barrel. So again, recapping, stocks at a record after earnings. Apple down today by 1.8%. Amazon lower by 2.1%. Shares of Meta today did advance by 2.1%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. Well, the next guest knows a thing or two about building a company. After all, he turned his ventilation company, Big A Fans, into a $500 million business that he sold a few years ago. He's now working in venture capital as the founder of Unorthodox Ventures. It's Kerry Smith, and he joins us now on the phone from Austin, Texas. Kerry, it's great to have you on the show. How are you?
I'm fine. Thank you very much.
Well, thanks so much for joining us. Let's talk a little bit about your journey for those people who aren't familiar with it. I think a lot of people have heard of the Fans and indeed seen the Fans, but you have a really unique story. So give us your short history.
Well, I don't know if it's that unique. I mean,
there aren't that many people who've built a company and sold it for $500 million.
Well, yeah, but we started the fan company in '99 and basically bootstrapped it. We didn't take any money, but I think some of that was because I wouldn't know what to have done with the money if I'd had it. And over the course of 19 years, we built a company to about $265 million annual receipts, and we had offices in Australia and Canada and Singapore and, of course, the U.S. And we ran this out of, the company was located in Lexington, Kentucky. We sold everything directly from our factory to the consumer. We didn't use distributors. We sourced all of our supplies, all of the components from the U.S. Most of the components that we purchased and that we used were located within 40 miles of our plant. So we were in that sense isolated.
Right.
But as you say, we sold it for $500 million in December of 2017.
All right, from selling big old fans to having a big old war chest of money now, Kerry, to do something with. You set up a family office, you've got a venture arm. So tell us about your venture arm, Unorthodox Ventures, because it's interesting. I was checking out your website. You are focusing on disruptive founders who want to make extraordinary products. I'm curious what you see as disruption or disruptive. What's extraordinary? What are you looking for?
I think when we started, I actually thought that we would be looking for disruptive products. It's a little bit difficult, more difficult than I thought, to find products that are new and that are actually have a market. I think what we concentrate more on today is the individuals that are building these companies or that are trying to build a company. And I think we underwrite them very carefully, but in the end, business and starting businesses and running businesses is really all about the people that are in charge and the people that they work with. So that to us is the main focus of what we do. And of course, one of the other things we try to do is make sure that we're the entrepreneur maintains the majority of the equity in his or her company which I think is something that's missing in a lot of VC firms.
Some skin in the game, essentially.
So in terms of how many companies come to you looking for funding versus ones that you actually fund, what would you say the ratio is?
The ratio is about 0.5%.
Wow. 0.5% of the companies that cross your desk are ones that you end up putting money in.
Yeah, and we're talking about thousands of companies that we look at.
How do you do that? How do you go through? Like, what jumps out at you? And is there a case, Carrie, where you'll see, wow, I really like this individual. They've got something, but I don't like what their product is. But I think we can work with them to develop something.
Well, that's very interesting you ask that, because it's seldom, but that does happen. And it's, I don't know, we've got a couple right now that I'm not enamored of the product or the service, but we sort of put them on hold in essence. And because a lot of these people, they're not actively, when we approach them, and we approach a lot of these people. Some of them approach us, we approach others, where we think, the product looks interesting or the people look interesting. And some of them, it's like, hey, this looks cool, and we love the way you do things and the way you think about things, but we're really not that taken with the product, and maybe we ought to, stay in touch.
Yeah.
Hey, but
you really have to have both of them. If you don't have both of them, if you don't have a product that has a market and you can't get to market with it, then it's moot. And if you have a product, gosh knows, there's lots of things out there, but very few people that can actually take them and bring them to fruition.
Yeah.
We are seeing a lot of venture capital firms throw a lot of money at companies right now. In 2020, U.S. venture capital funding reached a record high, $130 billion. We're still waiting to see the numbers for 2021, but it's likely going to be very big. I'm wondering, Carrie, why you think we're in a bubble right now, and how you think that bubble will pop.
I think there's a lot of people that think we're in the bubble, but I mean, it's one of those things. As long as the music's playing, I mean, people are gonna dance, and I honestly don't know, but I can tell you that so much of this is, for example, there's a lot written on how quickly you have to do these deals, which, again, to me is just totally insane, because if somebody calls you up and says, hey, here's the deal, here's what we're looking at, you need to make a decision in 24 hours, it's like, forget it. I can't make a decision in 24 hours. How can you know anything in 24 hours? And that, to me, that's sort of like getting stock tips from your shoe shine guy. I mean, maybe that is indicative of the beginning of the end, or at least the end of the beginning. I don't know.
Carrie, we've got to run, unfortunately, but love to check back with you in the future. I'd love to talk to you about some of the real estate investing you've done, because you and your wife have made some really impressive acquisitions. Carrie Smith, founder, Unorthodox Ventures, on the phone from Austin, Texas.
Yeah, New York City, Austin, Texas.
Yeah.
Other parts of the country as well.
Yeah, exactly. All right, Sound On with Joe Matthew coming up in just a moment. Joe, you've had some interesting conversations today.
Indeed. I think we shared one, actually, with the EPA administrator. We'll get into that, actually, the climate components of the bill as the president heads to COP26. We'll talk as well with Congressman Richie Torres, Democrat from New York. He's got some very strong feelings about the way this should work. He's South Bronx. You'll have the view from the Bronx coming up. And we have both New York mayoral candidates. How much can you fit in 1 hour?
I don't know, but you better not talk too much.
We'll
Let them talk.
Find out.
So you get them all in. Hey, have a good week and look forward to the show. Joe Matthew coming up with Sound On in just a few minutes right here on Bloomberg Radio. Folks, have a good weekend. Catch our weekend show at 8 a.m. on Bloomberg Radio, and catch our podcast. For Tim Stanovic, I'm Carol Masser. Have a good weekend.